The insurance marketplace Lloyd's of London has reported profit before tax of £9.6 billion for last year, down around £1.1 billion from the previous year. That's as Lloyd's saw insurance premiums rising by 6.5% of those written in the market. This as insurers are looking at how global uncertainty over issues like trade tariffs could affect the insurance market. Joining us now to discuss, John Neal, CEO of Lloyd's of London. Good morning. Great to see you in studio with us. I mean, let's talk about the uncertainty picture. So premiums already rising that you've seen in the past year. Given that we're watching so much changing in the macroeconomic situation, what should be the expectation around premiums for the coming year?
Yeah, I think as you said, I mean, you've just referenced our performance. It's strong performance, favourable insurance conditions, which means the price is right if you're selling insurance, and the economic conditions have been good as well. I think, as you've just been describing in the headlines, the world's just a more challenging place for everybody, isn't it? Whether when we look at the proliferation of protectionism, nationalism, geopolitics, it's just a riskier world. So I think what we've got to do as insurers is just ensure that we can help mitigate, measure, manage, price and insure risk. I think we've got a really, really important job to do at the moment.
If there is less global economic growth, and we've seen yesterday the Fed downgrade US economic growth, the UK is obviously stagnant, Europe question marks about whether defence spending will increase growth or not. With less growth, does that mean less business?
I don't think so. I think it's just as I'm saying, it's just a riskier world, isn't it? You've got financial uncertainty with inflation and interest rates. You've got systemic exposures that we all talk about. You've got war on land. You've got climate. I think businesses are conscious of the risk and they want to protect either their revenue streams or their balance sheet, and we've got a role to play there.
In terms of, we've spoken a number of times before where we've talked about the significant climate change risk, for example, the fact that so many are underinsured. There's now this idea, though, of cascading extreme events and extreme weather events. Is that going to be a major issue in the year ahead? We've certainly seen it in the past year in the US.
I think so. I mean, we thought last year, didn't we? They were predicting the most active North Atlantic hurricane season on record, and there were 5 hurricanes that made landfall, 2 of which we talk about, which is Milton and Helene. They didn't cost as much money as we thought, but dare I say it, look at the desperate events in California with the fire. We see fires and flood a lot more than we used to. We understand those risks. We can insure them. I think we've got a job to do, which we've discussed before, in making sure that we explain the value proposition of insurance, because there's no lack of capital or capacity or capability to provide cover.
But what about the question of being able to get insurance after these disasters as well? I mean, is that going to be a bigger issue?
I think it becomes an issue if we don't take a step back and work out what a new form of public and private partnership looks like. There is a role in some of the extreme events for government to play, but we should partner with government and work out how can we provide the most complete cover for everybody in these situations. Those conversations are starting to happen, I'm pleased to say.
There are worries about reinsurance or insurance after such disasters, especially in California. Can you reassure people there that coverage will be possible?
It's very different in the US in terms of the way in which the regulations operate on a state basis versus a federal basis. And the space that we play in is more of a mass market, so-called surplus market. We're not restricting the ability to provide cover at all in a state like California, and prepared to put our hands up and say, how can we help resolve the mitigation of loss at the front end and the protection at the back end. So we're trying to be active in the conversations there. Very quickly on the wildfire, I'll give you an example with fires. The fire started on the 6th of January. We knew they were going to start on the 4th, and we knew where they were going to start. So there is quite smart technology and data now that can really help people manage the loss, as well as just the insuring element of the loss.
You've spoken to us before about the broader picture facing the UK economy as well. I wonder, you're leaving your job at Lloyd's of London later this year as well, after 7 years as CEO in such a prominent position in the UK landscape. Are you more optimistic or pessimistic now about the outlook for the UK economy?
I feel okay about the UK, I think of all the places to be at present, you were talking about, to be fair to Trump in the US, he did say exactly what he was going to do, so there's no surprises there. Europe feels a tough place to be at the moment, doesn't it, genuinely? I think we've got a government that's trying to make medium to long-term decisions for the benefit of the economy to create jobs and promote growth. that feels okay.
Do you feel that the Labour government is as pro-business, is listening to business as much as perhaps you did before the general election? Again, when we spoke, and you were very positive about the idea of having stability and having two-term government.
Yes.
There has been great disappointment, at least a huge trough in consumer and business sentiment in the months and the weeks after the last budget, and now we've got a spring statement coming up in a couple of weeks.
I think it's been tricky for them, hasn't it? And I think we've just got to show a little bit of patience. It needs a bit of time. There isn't a sense. I think you do get a sense that they respect who they are as a Labour government. They've got obvious obligations to those that voted for them, and I think they are trying to make some longer-term decisions. So that's the way I look at it.
Do you think that the rest of the business community is as forgiving?
No, I think we're all a little impatient these days, aren't we? And I think we've got to think a little bit differently. When you think of the issues to solve, and we've spoken about that before, whether it's health at one end of the spectrum or education or the way we look after those in society of greatest need, we've got to do all of those things. But you can't fix those issues in 6 months, 12 months or 24 months. They are long-term issues that need smart, committed resolution. And, I think, dare I say it, as insurers, we can help with that. If even a government feels that something will interrupt its ability to commit to spending, it's always insurable. We can lean in and help on those conversations.
One question about the things that maybe you're handing over to the next CEO, the things that remain maybe unresolved at Lloyd's of London, the IT upgrade and so on.
Sure.
If there was something that you could say about handing over that business to the next leader, what's going to be the biggest difficulty?
I think, I genuinely think, handing over, I think performance is in good shape, as we've discussed. Digital journey, like any digital transformation, has been hard yards, but is genuinely happening. And I think we've got a voice that's valued. So I think it's the classic, isn't it? Talk to your stakeholders, listen to what they think they need, and act accordingly.